Good morning, friends. I hope you all must be aware by now about the amendments announced in the budget 2025, which was tabled on 1st February 2025 by our Honorable Finance Minister, which were relevant in your context. Not yet? Please go through our last video where the key highlights of the budget were discussed, which were relevant for charitable organizations. I am Ashish Agarwal from Team NGOenabler, and today in this video I am going to discuss in details about each amendment and provide you a complete understanding and analysis of its impact on your organization. As was discussed, the first and the most important amendment has been made for small charitable organizations for whom the validity of 12A registration has been increased from 5 years to 10 years in those cases whose total income does not exceed rupees 5 crores in each of the 2 years preceding the year of application. I repeat, only in those cases whose total income does not exceed rupees 5 crores in each of the 2 years preceding the year of application. Let me explain it with an example. Suppose the organization is already registered under section 12AB, having its validity up to assessment year 2026-27. As we know, it needs to apply for renewal of registration under subclause 2 of section 12A subsection 1 clause AC 6 months before the expiry, which means the application needs to be filed on or before 30th September 2025. Now we need to see whether the two conditions brought in by the new amendment is fulfilled or not. Now what are those conditions? First, the application is made in subclause 1 to subclause 5. And second, total income does not exceed rupees 5 crores in financial year 2024-25 and financial year 23-24. If the above two conditions are fulfilled, the registration shall be granted for 10 years, else 5 years. But as was mentioned in my previous video that I will discuss this in details in my next video, let's take a deep dive into the amendment. To start with, let's first have a look at the amended provision. In section 12AB subsection 1, the following proviso shall be inserted. Provided that where an application is made under subclauses 1 to 5 of the said clause and the total income of such trust or institution without giving effect to the provisions of section 11 and 12 does not exceed rupees 5 crores during each of the 2 previous years preceding the previous year in which such application is made, the provisions of this subsection shall have effect as if for the words 5 years, the words 10 years has been substituted. If you quickly go through the first line again, this extended validity benefit applies to trusts or institutions that have made an application under subclauses 1 to 5 of section 12A subsection 1 clause AC only, and not to the organizations applying under subclause 6 of the said section. This implies that the benefit is not available to trusts or institutions. I repeat, the benefit is not available to trusts or institutions applying for registration for the first time, whether before or after commencement of activities. It is granted only to applicants seeking re-registration of existing trusts, renewal of registration, or conversion of provisional registration to regular registration. The organizations opting for the first time direct registration under subclause 6 shall be granted registration for a period of 5 years only, irrespective of the total income. Let's take it further. We know that the new trusts have two options. It can apply for provisional registration immediately after the incorporation under the new provisions and then apply for final registration after commencement of activities under subclause 3. Alternatively, it can wait till commencement of activities and directly apply under Part B of subclause 6. With the proposed amendment in Budget 2025, such trusts may preferably opt to go through the provisional route and then convert it to regular registration to secure a 10-year validity rather than applying directly for regular registration after commencement of activities, which would limit the validity to just 5 years. Another clarity required with regard to this amendment is whether they apply only to registration certificates granted after 1st April 2025 or to the applications made after this date. In our opinion, usually the applications pending on the date on which the amendment shall come into effect are considered as per the new provisions. So, any certificates being issued on or after 1st April 2025 should be with a validity of 10 years irrespective of the date of application. Please remember, the amendments do not provide any relief to currently registered small organization. The changes will only benefit existing NGOs when they apply for renewal after completing their already granted 5-year period. I would also like you all to take special note that there is no corresponding amendment in section 80G. Consequently, despite the 10-year registration certificate tenure in case of 12AB, the 5-year compliance burden will persist for the smaller NGOs as organizations will still need to apply for 80G renewal after every 5 years, irrespective of the size of total income. In our opinion, we should soon hear that the 10-year validity period has also been extended for such smaller organizations in case of 80G registration. Now let's analyze the next important amendment for NGOs, that is the definition of specified persons under section 13 subsection 3 concerning the persons who have made substantial contributions to an organization. Let's first have a look at the amended provision. Section 13 subsection 3 clause B states that any person whose total contribution to the trust or institution during the relevant previous year exceeds 1 lakh rupees or in aggregate up to the end of the relevant previous year exceeds 10 lakh rupees as the case may be. The existing section 13 subsection 3 clause B, which shall be deleted, was any person who has made a substantial contribution to the trust or institution, that is to say, any person whose total contribution up to the end of the relevant previous year exceeds 50,000 rupees. Clearly, this amendment seems to be long overdue as the amount of up to rupees 50,000 in aggregate was relatively too low for the purposes of reporting. This implies any person whose total contribution to the trust or institution exceeds 1 lakh in the relevant previous year or exceeds rupees 10 lakhs in aggregate over all preceding years up to the relevant previous year shall now be considered as a specified person under section 13 subsection 3, and his details such as the name, PAN, address and the amount of contribution has to be reported in Form 10B and ITR 7. Accordingly, even clause D and E of section 13 subsection 3 has been modified to exclude such substantial contributor, thereby also excluding relatives of such donors and the concerns in which they are substantially interested from the definition of specified persons. Thus, to summarize once again, a donor will now be treated as a specified person only if they have donated rupees 1 lakh or more in the relevant previous year or have contributed more than rupees 10 lakhs in aggregate over all preceding years. The relatives of a donor will no longer be classified as specified persons even if any contribution is received by them. Similarly, any business or entity in which such a donor has a substantial interest will also be excluded from the definition of specified persons. This amendment has given a much needed relief to the organizations from reporting the disclosures related to the specified person. The earlier limit of rupees 50,000 for the donors to be considered as a specified person was becoming too impractical and burdensome for the NGOs. With the high limits prescribed for such donors, the NGOs will find it easier and feasible to compile and report the details. Yet another important amendment which we discussed was amendment in the definition of specified violation. So yes, this too was a welcome amendment considering the expertise available at the NGOs. While filing any application or forms, it can so happen that any small error or some details are not filled leaving the form incomplete. Cancelling the registration on this ground seemed to be an arbitrary power which was given to the income tax authorities, and this amendment has been removed now. In our opinion too, errors are human, and punishing the charitable organizations to the extent of revoking their exemption might have been too harsh on them considering their charitable nature. Let me tell you why. Cancellation of registration under Section 12AB shall invoke Section 115TD, and the organization might end up paying huge taxes on the accreted income. We have discussed about it in detail in our earlier video. If you have not yet watched it, click on the I button and have a look now. So this proposed amendment may seem like a small technical correction, but its impact is significant due to the severe consequences of a registration cancellation under Section 115TD of the Income Tax Act. Once a charity registration is cancelled, Section 115TD imposes an accreted tax on the NGO's entire net worth based on the market value of its assets. So this was all about the detailed discussion of the amendments proposed by the Budget 2025 for charitable organizations. Hope we have been able to bring in clarity with regards to the upcoming amendments for charitable organizations. For more such updates and tutorials, keep tuned to our channel. Don't forget to subscribe it and put your notifications on. You can also follow us on Facebook, Twitter, LinkedIn and Instagram. For any clarification, feel free to reach out to us through email or comment below. Thank you.